India has delivered a standout IPO performance in 2025, matching the US with a 20% global share of issuance volumes. In fact, the year marked a structural shift with larger deal sizes, deeper financial listings, and public market emerging as the preferred exit path for private capital. My colleague had a chat with Mahavir Lunawat, CMD of Pantomath Capital. Let's listen into that conversation.
From your important report which you have released, this is the Pulse 2025. How are the capital markets looking like for 2025? What are the key trends which we are seeing?
Thank you very much, Sharad, and wish you the best to you as well and the entire team. Thanks for this opportunity. 26, I think, looking quite optimistic. We are now at the cusp of capital formation growth. We are seeing a lot of tractions in the volume as well as value. And the good part is that we have seen IPOs coming from various segments, like it's from small to mid to large. There are companies from new age, there are conventional companies. So all in all, I think quite inclusive participation in IPO street. And we believe that next year is going to be double of what we have seen in 2025. So we estimate a capital formation of close to 3.5 to 4 lakh crores in that range in the primary capital market through various avenues, including IPOs, QIPs, and preferences. So that's our outlook for the market for coming year.
And Mahavir sir, another query is that, of course, the number of IPOs are going to be large, but the deal sizes are becoming larger. This year we saw like large tech IPOs coming in. Next year also we are filled with larger IPOs also coming in. Just I wanted to get your views on that, and will that also mean that some liquidity gets sucked out for the smaller SME players? What's your view on that as well?
Liquidity we are sitting on 5 lakh crores of dry powder with the funds and treasuries, which are basically investing in equities. So that's the kind of fund flow we are having in hand. And on top of that, we are having 4.5 to 5 lakh crores of fresh flows coming in every year. So in fact, we are having huge, dry powder that to doubling every year. So in a way, we are kind of in a disequilibrium, if I can use the word, where on one side we are having 7-8 lakh crores of funds as we speak, and then as against that we are having 2 lakh crore or sub 2 lakh crore of IPOs. So that's the kind of slate we are having. So if we are not having sufficient papers, the money will go to the existing stocks, and that will probably change the valuation of those stocks. That's one perspective. So even if, let's say, we have to have double of what we have seen in 25, still we will be left with enough liquidity. So there is absolutely no need to worry. And we have, in fact, seen in 25 as well that we have 103 IPOs coming on mainstream. Out of that, 2/3 of IPOs are below 1,000 crores or 1,200 crores. And then there are IPOs in larger segment as well. So I think all in all, there are appetite for investors in investing across the stages and scale of businesses. So there will be enough supply of money for SMEs, for lower mid-market, as well as larger size of issues going forward.
That's a very important point Mahavir ji has mentioned. But the FPI front, secondary market, it's been a love-hate relationship. But when it comes to the primary market, FPIs have participated. Do you see this participation continuing well into 2026?
Yeah, so we have to have love somewhere. So fortunately, primary market, is taking that baton on, and we have seen healthy flows from FPIs, close to 18-20%, from FPIs coming and participating in various anchors and in IPOs. Of course, one can still argue that that's far from the potential and the desired level. The good part is that it's a good mix of FPIs and domestic funds which are spearheading, value discovery and participation and contributing to capital formation. And interestingly, I think there are a lot of large, mid-sized family offices getting organized in alternates format. There are newer funds which are opening up in alternate space. So there is good amount of HNI, family office, alternate space, which is also now participating in a meaningful way. So all in all, I feel that FPIs, domestic institutions, and family offices all put together pull up in a meaningful way, and that will probably spearhead and support the kind of expected flows we need to have as an economy.